Hello, ladies and gentlemen. Thank you for standing by. Welcome to the webinar today, brought to you by ComplyRight. Mandatory ACA reporting in effect for 2016, how to meet the new requirements. Please note that during the presentation, all participants will be in a listen-only mode. As a reminder, this conference is being recorded Tuesday, November 10th, 2015. My name is Stephanie Thomas, and I'm your host today. Thank you everyone for attending today's webinar, and welcome. I'd like to review a few housekeeping items before we begin. If you would like to ask a question, simply use the chat feature located in the lower left corner of your screen. You can ask questions at any time, and we will answer as many as we can at the end of the webinar, time permitting. If you have any audio trouble, please message us in the chat box, and we will do our best to assist you. Please ensure your speakers are turned on with the volume turned up as well. You will receive a recording of today's webinar and a copy of the slides by the end of this week. And finally, you can join today's conversation on social media with the hashtag ACA Compliance. Now, I am pleased to introduce you to our speaker, Lisa Zamoski, health reform expert and journalist. Lisa, thank you for being here today. Now I'll turn it over to you, and we can get started.
Sounds good. Hi, everybody. My name is Lisa Zamoski. And as mentioned, I am primarily a healthcare journalist. I specializes in health insurance and the Affordable Care Act. I'm a columnist for the Los Angeles Times, and for the past several years have worked with WebMD on their health reform content. And during that time, in the first year of open enrollment, also had an opportunity on behalf of WebMD to interview President Obama at the White House about the law. I wrote a book about a combination of the health reform law and some other tactics for consumers to help navigate their way through the healthcare system. And so with that, why don't we go ahead and get started. Before we actually kick off the webinar, I'm going to go ahead and take a bit of a poll. The question we'd kind of like to know about, I'm interested in finding out how many full-time or full-time equivalent employees do you have, and we'll sort of clarify the question in just a moment. So if you could, go ahead and click on one of the answers, and we'll give you just a minute to respond. Okay. All right. So it looks like the vast majority of you, we still have numbers coming in, but it's looking like we're close to 80% of the folks on the phone today have answered that you do have 50 or more employees. And so you've definitely come to the right place because this employee count, as most of you likely know, makes you an applicable large employer. And so therefore you're responsible for meeting the ACA reporting requirements this 2016 tax filing season. Okay. So let's just talk really briefly about some of the learning objectives and you know, what we're going to be covering. I'm sorry. We are going to cover a lot in the next hour, so let's just jump right in. We're going to go over, you know, how you're going to go ahead and determine if you're an applicable large employer. We're going to go ahead and talk a bit about how you're going to calculate full-time and full-time equivalent employees. We'll talk about understanding minimum essential coverage, which you're required to offer in the health plans that you make available to your employees. Some pointers for capturing and tracking required data that you're going to have to report to the IRS, and how to, you know, to properly complete and submit your 1095-Cs and 1094-C transmittal forms. Okay, well, let's talk a little bit about the origins of ACA reporting. As most of you probably know, the Affordable Care Act represents one of the most comprehensive changes to, you know, the nation's healthcare system in decades. Excuse me, I'm sorry. I'm going to stop for a second just to make sure that I have not. Stephanie, could you help me out? I think I may have lost myself on the slides here.
Okay, I'm just getting you back.
Apologies, everybody. Okay. Am I in the right spot,
Are
Stephanie?
you all good?
I think.
Why don't you just keep talking and I'll catch up with you.
Okay. Sorry, everybody. Let me just let's move on to let's move on ahead here. Okay. So the Affordable Care Act reporting requirements, let's just start with the IRS tax codes and the ACA reporting. They are enforced by two separate sections of the Internal Revenue Code. There's Section 6055, which applies to health insurance carriers, the small employers that sponsor self-funded health plans, and then other entities that provide minimum essential coverage. So it could be multi-employer plans or government-sponsored policies such as Medicare, Medicaid, CHIP, TRICARE, that sort of thing. Then there's also Section 6056, which is directed toward applicable large employers. So that's most of you on the phone. That's those of you with 50 or more full-time employees or full-time equivalent employees. Section 6056 also requires that large employers share coverage details with employees so that they can determine for themselves if they qualify for a premium tax credit to buy health insurance, on their own through the health insurance exchanges set up under the law, either through healthcare.gov or one of the state-based exchanges that have been established. Sorry. Let's go back here. Through mandatory information reporting, tax code section 6055 and 6056 help ensure compliance with the Affordable Care Act for employers. This is particularly focusing on the employer shared responsibility provision, which applies specifically to large employers. So basically, if you're an ALE and you don't offer health insurance to your full-time employees that meets the law's requirements both for minimum coverage, essential coverage, and affordability, you could be on the hook for financial penalties. Okay, generally speaking, whether or not your company is responsible for reporting the health insurance status of your employees, as we've talked about, really depends on a couple of things. One, certainly the size of your business, but also the type of insurance you maintain. For example, whether you're offering a fully insured product or you are a self-insured employer. So reporting comes into play, as we've already talked about, for applicable large employers that meet 50 or more full-time employee count, and all self-insured employers. So if you're in the minority on the phone here today of small employers, those with 50 or fewer employees, but you offer insurance and you're self-insured, it's a smaller percentage of folks around the country, but those businesses do exist. Regardless of your size, you are required to report. And the IRS forms that are used to report this information are the 1095B and 1095C. And then there are transmittal forms, sort of cover sheets, if you will, that have to go along with these forms, and those are 1094B and 1094C. Now, let's talk a little bit about determining if you're insured or self-insured. Presumably those of you on the line may have a sense of what kind of plan you're offering, but for those of you who may be unclear, let's just briefly kind of go over how this works. This question does actually come up a lot in discussions around reporting under the health reform law. A self-insured or self-funded employer generally contracts with an insurer to administer its plan, but the medical claims are paid out of the company's own funds. If you are a fully insured health plan, on the other hand, you pay the insurance carrier premiums. It pays health care claims based on the coverage benefits outlined in the policy. Firms most impacted, of course, by the law's new reporting requirements are those that are that had 50 or more full-time and full-time equivalent employees in the preceding calendar year. Let's kind of go into those distinctions now. So a full-time employee averages at least, is defined under the law as an employee who averages at least 30 hours of service per week during the calendar month, or 130 hours in a month. These are the hours that you're going to need to be tracking, hopefully are already tracking for your employees. And keep in mind that the hours of service represent each hour an employee is paid or is entitled to payment. So that would include things like vacation time, leave, holidays, illnesses, any kind of incapacity, jury duty, that sort of thing. So those hours need to be counted as well. Once you've calculated your full-time employees, and we can talk a little bit about, I'm sorry, my apologies. I've gotten lost again. I think the slide number's changed.
Hey, Lisa, you're fine. I'll get the slides. You're good.
Okay. You're gonna take that over?
Yeah.
Okay. Apologies. Okay. All right. So let's talk about how you go about calculating your full-time employee equivalents. People working, first of all, part-time, it's important to say, you're going to add up the hours to determine the number of full-time equivalent employees for a month. You're going to go ahead and you're going to have to do some math. So people who are working part-time, first of all, I should say, also count when it comes to determining how many full-time workers or business employees. So let's say your company employs a combination of full-time and part-time employees that together equals at least 50. You have to provide insurance or face the possibility of owing a penalty. So to determine the number of full-time equivalent employees for the month, you're going to add up the part-time service hours in a month. That's up to 120 hours per employee. You're going to divide the total of those hours by 120. And a detail that's important to know is that if this results in a fraction, you're going to go ahead and round down to the lower next whole number. So for example, if 7 employees work 20 hours in a week, you'd have 4 full-time equivalent employees. That's 7 times 20 hours, it equals 140. You can see the math basically on the slide. And once you've calculated your full-time equivalent employees, you're going to add that number to your total number of full-time employees who are on staff to determine whether or not you're an applicable large employer. And there's something else to keep in mind here. An applicable large employer may be a single entity, but you could also consist of a group of related entities. So if there's a parent company, a subsidiary, or other affiliated entities, for example. So the equation here is if the combined number of full-time and full-time equivalent employees for the group is large enough to meet the definition of an applicable large employer, then each employer in the group is part of that ALE, and therefore subject to the employer shared responsibility provision, even if the company on its own separately would not qualify for that status. This is, I guess the next slide, is probably an obvious point, but keeping track of the number of full-time and full-time equivalent employees as it pertains to the ALE classification is really critical. This classification is determined each calendar year, and it depends on the size of your workforce in the previous calendar year. So for hourly employees, you're going to have to count the actual hours that they worked. For a non-hourly employee, you should count either the actual hours that the employee worked, the days worked equivalent, so that's basically 8 hours for each day, and the employee is required to have given at least 1 hour of service, or the weeks worked equivalent. So the employee is credited with 40 hours for each week with at least 1 hour of service. What is not included in the calculation are independent contractors. There are certain types of variable workers, seasonal employees working 120 days or less in a year, and COBRA and retired enrollees. And I know somebody I saw in the questions had asked something about COBRA and retirees. They will not count towards your full-time equivalent, but you do have to report on the fact that you are offering those folks insurance. Those individuals will need information for their own tax purposes to demonstrate that they have appropriate coverage and for the purposes of the individual mandate. So all this sounds a little bit easier said than done, I'm assuming. I recognize that calculating employee hours for the Affordable Care Act reporting is a huge undertaking. And for this reason, frankly, you may need to rely on dedicated time tracking software or just choose to outsource this responsibility to a payroll vendor or benefits administrator. There we go. Okay, so let's go ahead and move on. What if you're not at the 50 or more employee count? There's considerably less reporting responsibility for smaller businesses. For some, in fact, there will be none at all. As I mentioned already, if you are self-insured, if you offer a self-insured product to your employees, you will need to fill out a form, and that's the 1095B, and again, the transmittal form that corresponds with that, and that's the 1094B transmittal form. You're going to have to report the name, the address and social security number, or date of birth as an alternative of the individuals to whom you offered coverage throughout the previous calendar year. Again, this is good news for those of you with fewer than 50 employees who are not offering a self-insured product. You aren't required to file anything at all to the IRS. So you're not required to offer health insurance. There's no penalty that will be inflicted if you don't, and therefore the reporting requirements, you get a pass on that. Because the reporting requirements under the law fall mostly on large employers, that the remainder of this webinar is really going to focus more on their responsibilities as we head into the next reporting, the first reporting period. Okay, so before we get into the details of the actual forms that you're going to be filing with the IRS, let me explain a little bit about minimum essential coverage. For the purposes of reporting, minimal essential coverage refers to a legally definable level of coverage. This is what your health plan has got to include, some basics, in order to sort of pass muster under the law. So under the employer shared responsibility provision of the law, you may be penalized if you don't offer minimum essential health coverage to at least 70% of your full-time employees and their dependents, and at least one full-time employee receives a premium tax credit through the health insurance marketplace. So if you're not offering coverage that passes, that has the 10 essential benefits included in the plans that the law requires, and as a result of that, one of your employees is able to get financial assistance on the marketplace, there will likely be a penalty that you'll have to pay for that. And that percentage, in other words, the 70% of your full-time employees, it changes to 95% of your employees after 2015. So that's an important detail to recognize if you're not offering coverage to all of your full-time employees at this time. A second type of penalty can be triggered if you do offer minimum essential coverage, but the coverage wasn't considered affordable or didn't provide what they're referred to as minimum value under the law. And again, if a full-time employee is allowed to receive a premium tax credit because at least one plan that you offer did not meet the affordability requirements and they get tax credit as a result of that, you will be on the hook for a penalty. So, most broad-based medical plans do meet the legal parameters for minimum value, where the plan actually pays for at least 60% on average of covered benefits. Regarding affordability, the premium, as I said, for the lowest cost self-only, and that's been a point of confusion between self-only and family coverage, this only applies to the individual employee, should be less than 9.5% of an employee's gross household income, gross income really. It's hard for employers to determine the household income, so it will be on the employee's salary. The other thing that I should just mention as a detail is that while it's 9.5%, those percentages go up a little bit every year. So for 2015, it'll actually be 9.56%. In 2016, 9.66%. That's just something to pay some attention to. You can use 3 safe harbor tests to determine if the coverage you're providing is affordable. And I'm not going to get into them fully right now, but just so you're aware, it's reporting through your form through a W-2. Rate of pay safe harbor, and then there's the federal poverty line safe harbor. And again, how you report those is definitely, and what's most appropriate for your business it would certainly be an appropriate question for your benefits advisor.
Hey Lisa.
Yes.
We got a question to, if you could go back and repeat that same information you stated about the 70% of the coverage.
Yeah.
And then the 95% changes, so they could hear that one more time.
Yeah, sure. So this is under the employer shared responsibility provision of the law. So for this year's reporting, the penalty can be inflicted if you don't offer minimum essential coverage to at least 70% of your full-time employees and their dependents. And of course, the penalty is triggered if you don't meet those requirements and one of your employees therefore heads to the marketplace and gets financial assistance to buy a private insurance product. So you have to offer coverage to at least 70% of your full-time employee base. That changes after 2015. It's going to have to move up to 95%. And I should also mention, just for those of you, if you've missed something, that these slides are going to be available for everybody. My understanding is, right, Stephanie, will be sent to everybody by the end of the week. So you will also be able to kind of peruse this more slowly. Okay.
Yep. But thanks for covering that.
Sure. Okay. So we'll go ahead and move on to minimum essential coverage penalties. This is, again, another sort of base requirement that your policies have to meet in order to avoid a penalty. So we've talked a little bit about minimum essential coverage. So let's go through this quickly. But for reference, the types of insurance that generally are going to meet the standard of minimum essential coverage include programs like government-sponsored programs like Medicare, most Medicaid programs, CHIP, TRICARE, the VA, employer-sponsored coverage, any job-based plan, and that does include retiree plans and COBRA coverage, also meet minimum essential coverage under the law. Individual insurance is purchased through the marketplace or even outside of the marketplace. Any private insurance policy sold through a broker or directly from an insurance company also qualifies. Grandfathered plans, they still exist. These are plans that were in place before the Affordable Care Act took effect and have made relatively few changes to their benefit design and their costs. The number of grandfathered plans really does shrink every year, but there are still a fair number of them out there, particularly among larger employers. And then there are other miscellaneous types of plans, other types of policies that are recognized by the Department of Health and Human Services as minimum essential coverage. What minimum essential coverage, I should say, does not apply to would be things like fixed indemnity coverage, life insurance, dental or vision coverage, or any other kind of supplemental plan you may make available to your employees. Critical illness, accident, anything like that does not count. That is not a part of this reporting process, and it's not considered a minimum essential coverage under the law. Okay, now for the fun part, we're going to actually take a look at the forms, at the 1095 forms for ACA reporting. To satisfy the reporting requirements, fully insured and self-insured applicable large employers must complete Form 1095-C, and again the corresponding transmittal form 1094-C. If you're a fully insured employer, you'll complete Parts 1 and 2 of the 1095-C. Again, you're not paying for your medical claims out of your own funds. You've signed on with an insurance company to handle all that. You're just going to focus on Parts 1 and Parts 2. Those of you who do offer self-insured plans are going to complete Parts 1, 2, and 3. Every employee working for a large employer who is eligible for insurance should receive a 1095-C. That means eligible employees, even those who decline to participate in your health plan, still receive a 1095-C. Again, this is to enable them to meet their individual requirements under the law, the individual mandate, which says that all of us basically need to have health insurance, or we ourselves individually could be on the hook for a tax penalty. So this is the form that they will take to their tax preparer by April next year to demonstrate that they do in fact have insurance. Okay, to report the necessary information to the IRS and to furnish a form to employees, you're going to need to capture a number of details. So Part 1 on the form is where you enter basic identifying information for the employee, their name, their address, their social security number, any identifying information for you, the employer, such as a name, address, and your employer identification number. Part 2 is really all about the offer of coverage. In the 3 lines here, you're going to enter information about the health coverage that you've offered by month, assuming you've offered coverage, the cost of the cheapest monthly premium the employee could have paid, again for self-only coverage, not for family coverage, and the months that you met an affordability safe harbor. If you're self-insured, again, you're going to have to fill out Part 3. This is also about the coverage that was actually supplied to your employees, and this is where you'll enter information about covered individuals' enrollment in the plan that you've offered or plans that you've offered. This includes social security numbers, or if you don't have that information, it could be a date of birth. This information isn't completed by insured employers because it's captured separately by the health insurance providers themselves through the 1095-B. So the bulk of the work in completing the 1095-C will be with lines 14 through 16 in Part 2. Although the subject is really too complex to cover fully in this webinar, I'd like to share a few details with you, a few tips. For example, the offer of coverage on line 14 that you'll see here in the slide, which covers 9 codes, it's 1A through 1I, describes whether or not minimum essential coverage was offered to an employee. So this is, again, all about the offer, not necessarily the actual coverage. And a quick tip is if one code applies for the entire 12 months, you only need to enter it once in the all 12 months column. They try to make it a little bit easier on you so you don't have to fill it out multiple times. If you take a look at line 15, you're reporting the employee share of the lowest cost monthly premium, again for self-only minimum value coverage. So this helps the IRS determine if affordable coverage was made available to the employee. You're only going to have to fill out this section if you entered a handful of codes, either 1B, 1C, 1D, or 1E on line 14. You do have to include cents, not just dollars with this figure, and you don't want to round numbers. It's got to be specific. If you entered the code 1A on line 14, nothing needs to be entered on line 15 because this code indicates that you offered essential coverage, providing minimum value to the employee and dependents for the entire year for which they were eligible. Okay, we'll move to the next slide. Line 16, which you see here, which involves, again, 9 codes, 2A through 2I, it clarifies issues such as whether an individual was employed during the month, whether the employee was eligible or enrolled in coverage, if any affordability safe harbors applied when an employee declined coverage, and if the employee was in a waiting period or other what they call limited non-assessment period. So for example, it could be a new variable hour employee who's still in some kind of an initial measurement period for which you'd be liable for a penalty. So in a nutshell, what you're doing here is you're giving the IRS enough information and so that they, a reason why you shouldn't be penalized basically under the employer shared responsibility provision. Again, you only fill this out if a code applies to the employee for any particular month. Okay, so we've addressed the 1095-C, but that's not all when it comes to ACA reporting. There's also 1094-C transmittal form that summarizes, as I said, there's kind of the cover sheet in essence. It summarizes 1095-C filings submitted for the season. So let's just briefly kind of go over some of the details that this is going to cover. It's going to identify the information for your business, your business's name, the address, the employee identification number. It's going to give information about whether or not you offered coverage, again going back to the question from before, to at least 70% of your full-time employees and their dependents. Again, in future years that number is going to jump to 95%, but for now, for this year's reporting, you're looking at 70% of your full-time employees. The total number of 1095-Cs that you're issuing to employees, information about members of the aggregated applicable large employer group, if any. Again, if you're part of a subsidiary, you've got multiple work sites. Full-time employee counts by the month, total employee counts by the month, and whether you're eligible for certain transition relief, including certifications. I'll just mention, and we'll get into this a little bit later, employers may file multiple 1094-C transmittal forms for various company divisions, but in the end you have to file one authoritative transmittal that provides comprehensive information on all of your employees. There's a related aggregated employers, there's a place to indicate this on the form. All right, we're covering a lot of really detailed information here, so let's just take a breath and find out how we're doing. Why don't we take another break and just answer another really quick poll question. This time I'm curious what you know about the deadlines for ACA reporting. Clearly an important detail. Are you aware of when to get statements to employees in addition to filing with the IRS? So take a look at your options here, and if you would, file in your answer. And while you're answering that, I see there is one question. I'm sorry. It should be done first. Okay. I'm sorry, I lost the question. Okay, by the end of February. Okay. Let's see where we stand. So this question was a little bit tricky, and that's because you can, some businesses have a choice as to, whether or not you e-file or you file paper forms, and when exactly you have to file. So there are different deadlines depending upon how you decide to file, whether you use paper or e-file. Unless your company has 250 or fewer, 250 or more employees for whom you're filing, you have the choice. But if you have 250 or more employees, you are required to file electronically. But assuming that you're e-filing, the correct answer is A. So to help you manage,
Lisa, the correct answer is B, at the end of March. I flipped.
Oh, we have it. Oh, I'm sorry, I didn't see. Okay. All right. Well, let's just go over the specifics then of the deadlines right now. Let's just do that. Okay. So 1095 forms are filed and distributed on the same schedules as W-2s and 1099s, something you're all probably quite familiar with at this point. So it's just another type of information reporting in the eyes of the IRS, and therefore they follow the same schedule. So here's what this means. So by February 1st, 2016, you have to distribute Form 1095 copies to your employees. And the date actually is February 1st for next year because January 31st happens to fall on a Sunday in 2016. So in future years it'll likely go back to January 31st. February 29th, 2016, paper filings of 1095 and 1094 transmittals to the IRS. And again, the date is February 29th because the 28th falls on a Sunday again. And March 31st, 2016 is when e-filings of 1095 and 1094 transmittals to the IRS are due. Again, about electronic filing, not only is it a more efficient way to file with the IRS, and it gives you another month basically to get your filing done, but it's also a requirement to file this way if you have at least 250 forms that you're sending in. So if you're a bigger business filing 250 or more forms, understand that you don't have a choice and that e-filing really is your only option. Okay. Okay, so let's talk about avoiding filing penalties. Again, we've talked about the fact you know that if you have 50 or more full-time employees or equivalents, you're going to have to comply with ACA reporting requirements, or you're potentially going to be on the hook for some pretty steep penalties. So there's a number of reasons. Let's just go over them really quickly as to how you might actually incur a penalty. Failure to file the forms that we're talking about, that's going to lead to a penalty. Failure to give your employees the statements that they need to file their taxes can also result in a penalty. Failure to file on time, and failure, again, to file electronically when you're required to do so for larger employers with 250 or more forms that they're sending in. So beginning January 1st, 2016, the IRS penalty for failing to file or furnish ACA forms to your employees doubles from $100 to $250 per return. And that's with a maximum of $3 million. So obviously this is something you really don't want to mess around with and you want to make sure you avoid. That being said, you should be aware that during a one-year transition period only, you won't incur a penalty if you make a good faith effort to comply but you accidentally file incorrect or incomplete information. They recognize that this is a big undertaking for businesses and that there is confusion out there. The relief exists, again, only for filing incorrect information. It's not for failure to file outright. You'll get a break if you did your best to capture everything but you fell short, but you're not going to get a break if you ignore the filing requirements altogether. That's not an option. So as you might imagine, the information gathering process for ACA reporting can be challenging. To capture all the data required for the 1095 forms, you may need to pull from 4 major sources or internal departments within your company. Those would include human resources, payroll, benefits, and then your time tracking systems. So this is going to require careful coordination, sharing, and monitoring to complete the forms accurately on time. It may be a good idea to, if you're working across departments, to really put somebody sort of in charge of coordinating that so things don't fall through the cracks. Strict security is really also a requirement here because you're dealing with the employee's name, their health insurer appears on the same form. The data is considered protected health information, and so using a tax filing solution that is SOC certified and HIPAA compliant, eFileForBiz.com certainly can provide an added layer of protection with this type of data. Let's just go over a couple of other sort of essential do's and don'ts to try to ensure that you have a smooth filing process in the coming months. Something you do want to do, you want to notify employees that they're going to be receiving a 1095-C and that they may need this information in order to complete their previous tax year filing, particularly because this will be the first year that the vast majority of employees are receiving this. You want to make sure that they understand it's coming, what it is, and what they need it for. Don't file. This is a don't. Don't file more than one 1094-C authoritative transmittal form. We mentioned this a little bit earlier. It acts as the final transmittal representing the total filings for the season. Do go ahead and file corrected returns as soon as possible if you've discovered that you made some kind of an error. Just go ahead and get that in as quickly as you can. Do file Form 8809 if necessary for a 30-day extension for filing with the IRS. There is no signature or explanation needed for this extension. A 30-day extension for providing forms to employees, however, is really only going to be available by sending a signed letter to the IRS with the reason for the delay. And you don't want to file more than one 1095-C per employee. If your organization has different divisions with different benefits, an employee moves between divisions during the year, you'll need to consolidate data into one 1095-C form. Okay. All right, so we're kind of reaching the end of the webinar. So let's wrap things up, excuse me, and review a few key points. Again, beginning January 2016, the regulations under the Affordable Care Act require that certain employers, large employers, file annual information returns with the IRS and deliver employee statements with health insurance coverage information. The people, again, the companies most impacted by these regulations are called applicable large employers. Those of you who have 50 or more full-time or full-time equivalent employees. Self-insured employers with fewer than 50 employees are also required to report and send copies into the IRS. As a way of preparing yourself for 2016 and to fill out Forms 1095-C and the transmittal form that corresponds to 1094, applicable large employers will need to track whether or not they offered full-time employees and their dependents minimum essential coverage that meets the minimum value requirements and is affordable. Again, about 9.5% of the individual's annual income. Otherwise, you could be subject to penalties under the employer shared responsibility provision, and this is known as the employer mandate. And so those penalties can be quite steep. You also need to mind the filing deadlines that we just went over to avoid IRS penalties. 1095 forms, again, are filed on the same schedule as W-2s and 1099s, which means you're going to need to distribute forms to recipients by no later than February 1st, 2016. And if you file electronically to the IRS, you have until March 31st. And again, just a reminder, if you have 250 or more employees, you are required to file electronically. Relying on a reputable IRS authorized e-file provider like eFileForBiz.com can help you meet the demands of the new ACA reporting requirements. And certainly you can get more information on this, on the secure and efficient service and, after today's presentation. I should also mention again, I see somebody had asked about receiving the presentation afterwards, which everybody will do. And we've covered a lot of information in this hour. Really appreciate you taking the time to participate in today's webinar. That's all I have for today. I see that we do have questions in the chat box, and I will certainly, in the next couple of minutes we have available, try to entertain a few. And I should also mention, and maybe Stephanie, you want to talk about this, that if the questions that I will certainly respond to are the overall issues around the law. Anything very specific about your company probably is best addressed with your benefit advisor. And also afterwards, any questions that we don't get to today, questions will be answered, could potentially be answered, and sort of an answer sent to you after the webinar. Is that correct, Stephanie? Am I right about that?
Yes, Lisa. So as Lisa said, contact your benefits administrator if you have very specific questions for your business, but any more general questions or questions about filing, you can email me, and I will send my email address into the chat if you have any follow-up questions that you really need addressed after the presentation. But we will try to cover as many as we can in the next 10 or so minutes. So you ready to get started, Lisa?
Sure.
Okay, so first off, and we can kind of go back and forth. If you see a question that you want to answer, go ahead and do that. Our first question is from Derek, asking if we're an ALE that doesn't offer coverage to our employees, must we still file the Form 1095-C?
Yeah, you are still required to file the form. If you are an applicable large employer, you have 50 or more full-time or full-time equivalent employees, you do have to file the forms. And then, of course, you may potentially be on the hook for a penalty for not offering coverage. But the IRS does need to see whether or not you've made that offer. And again, it also is going to be important for your employees when they go to file their taxes because if they've, to demonstrate that they didn't have an offer of coverage at work and perhaps, went to the marketplace to get individual coverage on their own, and I'm sure in some cases, probably qualified for a tax credit. So the government does need to see that information.
Okay, that's good for everyone to know out here. Another question from Mary. When determining if we're an ALE for 2015 reporting, do we use the employee count from 2014 or 2015?
Yeah, so it's a good question. So you're going to determine whether or not you qualify, you're going to use the employee count from 2014 to determine if you're a large employer for 2015, even though you're reporting the coverage offered in 2015. Was that clear? Did that make sense, Stephanie? I don't know. Yes, it's 2015.
Yeah. Well, that's the right answer. So, and if you have any other clarification, I will give my email address. Everyone can email me if they have questions, and we'll get an expert to answer for you, another expert as well. We had a few questions coming through the chat. If there's any software to help assist you with filing, and yes, HR Direct does have new software to help you file 1095-C, 1094-Cs, and 1095-B and 1094-Bs, and you will get an email with more information about the software, and you can also use efileforbiz.com to file your ACA forms online directly, and we'll submit to the IRS for you. If you have a batch number of filings, we can get that done for you as well, and you'll get more information about that in your follow-up email. To move on to other questions. Oh,
yeah, I see there is a question here from Rochelle asking if we're not an ALE this year, but we do offer an insured health plan to our corporate employees. Are we required to report? And the answer is no. If it's a fully insured health plan, the responsibility for reporting to the government and the responsibility for sending forms directly to your employees for their own tax filing purposes will be the responsibility of the insurer. So if you're contracted with an Aetna or a Blue Cross Blue Shield, something along those lines, that information and that filing will fall to those companies and not something that you have to worry about if you're not an ALE.
Okay, that sounds good. Okay, so looking through the chat, so I think we covered this, Lisa, but Lori had a question. If we have less than 50 full-time employees that are provided coverage, do we still need to file a 1095-C?
No. No, the answer is no. Really, the 1095-C is really for applicable large employers, whether fully insured or self-funded. So that's in cases where the employer is responsible for filing that. If you are, if you're a small group, or you're, particularly fully insured, again, this is not something that you're going to have to deal with. It's only for applicable large employers.
Okay, well that's perfect. Thank you so much.
Mm-hmm.
Just looking through here to see if there's anything else to cover.
Yeah, I see. Somebody asked about, let's see, it's a little bit of a confusing
question. A lot of questions coming in, so we're just making sure we get to them. Do you, Lisa, we want to talk about from Marcy, part-time employees that are students who work more hours during the summer, so maybe they're, when they have more hours, they might have a different classification. Can you average the hours out over the year?
Yeah, that is a good question. So what you need to do, kind of going back to the calculations, is really I don't know the answer to that. I would say, because there are look-back periods. I believe the answer is yes, but I have to be honest with that's something I'd have to get back to you on. I don't know, Stephanie, do you want to add something to that? I'm pretty certain that it would be for the year, but let me just clarify that and get back to you.
Yeah, we'll clarify that for you. We'll get that answer to you at Marcy. Okay, I have another question for you, Lisa.
Okay.
The question is from Jan. Can health insurance be offered to some employees and not others if you are not an ALE?
Yeah, again, I mean, if you're not an applicable large the employer's mandate essentially really only applies to employers with 50 or more full-time or full-time equivalent employees. So, under the law, you are not required to offer health insurance at all if you're a smaller employer. So these requirements don't apply to you. Government's not really looking at what you're doing. So you have certainly more freedom than under the Affordable Care Act, and certainly a large employer.
Government's not looking at what you're doing. Now that's an interesting.
Well,
yeah, no, we knew what you meant.
Yeah.
Okay, the next question through the chat. Oh, there's so many coming in. I just want to catch it. It came from Jim. How do you determine what household income is for the employee?
Right. So that's a good question. I mean, the answer is you really can't, right? You don't know what your employee's spouse is earning. So you're really looking at the income that the employee is paid. That is the bar by which you're judging this. Yeah, I mean that's all you really have access to. So it has to be the employee's overall income for the year. Okay. Can you answer a little bit more for Jennifer about the COBRA participants, especially for the self-insured? Is there anything else that we need to add on that, or did we cover it all in the presentation? Well, you do need to report if you're offering COBRA insurance. There is a spot on I believe on the 1095C where you're going to indicate that the folks that you're offering COBRA coverage to or retiree coverage to do not count when you are figuring the number of employees active employees you have, but it is something that you will have to indicate you are making available to an employee, and there is a spot on the form for you to do that. So yes, if you're offering coverage, COBRA coverage to former employees, that is something that you will need to report.
So on the ALE classification, this sounds like an interesting one from East. What if many small companies are owned by a common owner? Can there be a combined ALE in total?
Yeah, and actually I think we went over this earlier in the presentation. It will likely be the combination of the different, you're saying different companies that they own that are all under the same owner.
Yeah, I think that's what he's asking.
Yeah, and there can be details. In some cases it may not be, so you do need to check with your advisor. But overall, yes. I mean, it could very commonly, quite possibly be the case that although they're separate entities, if there is a subsidiary, there's own a parent company, that all of them will be considered in totality together, all of the employees, to determine whether or not the company is considered an ALE under the law.
Okay, I hope that clears it up for you, Lise. Okay, I have a few more questions. I think we have time for one or two more. This one is from Gail. Are 1095-Cs only prepared for employees who are offered coverage?
Right, that's a good question, and the answer is it has to, I'm sorry, say that one more time, who are offered coverage or who are?
Yes, who are offered coverage.
Yeah, so you are, let's see, so it is for employees who are offered coverage, yes. It's only for those to whom the coverage is made available. That's what they're looking at.
Okay. We've had a few questions about formatting for 1095-Cs, and all of the formatting can be straightened out if you do use ACA software. You just enter the data into the software and it kind of compiles it for you, and all of your answers will be there. So in your follow-up email, you will get a little bit more information about the software and how that can make it a little bit more simpler for you, so you're not alone when you're submitting all of the forms. Okay, one last question, Lisa.
Okay.
If you have less than 50 FTEs or full-time employees, can you offer health insurance to some employees and not others?
I think we already answered that one.
Okay.
Yeah, and again, the answer is that if you're a small employer, there are no requirements for you under the law.
What if the employee was eligible for assistance prior to coming to work for the employer?
For a small employer, you're saying?
It's
I'm
not
sorry.
clarified, so I would assume
you're talking about like financial assistance through the Affordable Care Act?
It hasn't been clarified, but we can answer it on that basis, yes.
Okay, well, let's just, the bottom line is that, the way it works under the law is the goal here was to make sure that it wasn't set up in such a way so that employers just wholesale, stopped offering health insurance to employees. So if somebody comes to work for you, they've previously had marketplace coverage and they've been receiving a tax credit to help cover the cost of their premium or even cost sharing. But you make available to them now as a full-time employee a health insurance policy that meets the minimum value and all the other requirements of the law, then that individual would no longer be eligible for tax credits through the marketplace. So likely the best situation for that individual would probably be to pick up the health insurance that you're offering them through their job. Because once they are, once there's a demonstration that there is, employer insurance offered to them that meets the requirements of the law, those tax credits are no longer available.
Okay, thanks for clearing that up for us. So that is all the time we have today. We are past the top of the hour. So I would like to invite everyone to our next webinar in December, Roundup of 2015 Labor Law Posting Changes. What do they mean for your business? There have been certain legal trends that have been on the rise, and 2015 was a particularly action-packed year. If you join us next month, we will summarize the mandatory posting changes for 2015 and what they mean for your business. We'll talk about all the legal trends impacting posting compliance, including state minimum wage increases, expanding sick pay laws, and new city and county posting ordinances that may affect you and your business. So I'd like to thank Lisa again. Lisa, thank you for being on this webinar with us today. I know it was a lot of information and a lot of tricky information, but it was quite insightful. So we really appreciate your time, and thank you to everyone for being on the presentation with us. We'll email you by the end of this week with the slides and more information about ACA software. And my email address is in the chat box. If you have any follow-up questions that you would like answered at this time, please email me at that address, and we'll address them as time permits. So thank you so much.
Oh, yeah. Can I just make one clarification? Somebody asked a question about filing, and I'm not sure if I answered it. I just want to clarify. You asked about filing a form for which employees. And I'm sorry, if you're an applicable large employer, you actually have to file a 1095-C form for each employee who was a full-time employee. And I'm not remembering the details of the question. I think she may have asked for only those who were offered health insurance. You have to file for each full-time employee, whether offered coverage or not. And then the IRS will determine if you've met the 70% requirement. I'm not sure if I had confused that when I answered it, so I just wanted to clarify that detail.
Okay. Well, that's good. No, that's perfect. That's why we're here. We're here to clarify the ACA reporting requirements. So thank you so much again, Lisa. Thank you all for participating, staying on the line with us for the full hour. We covered a lot of details, and we'll have this information for you accessible so you can reference it further. So thank you so much, everyone, and have a great day.